Welcome back for my final morning report analysis video on Thursday, the 12th of January with me, Richard Perry, market analyst at Handset Markets. I'm going to look at gold as my final chart, and we've seen this rally on gold back towards 1200 level and above. It's broken back. It's now 1204. Now 1200 was basically this old key support through the first half of 2016. Sort of broke down back in November on this candle here on the 23rd, and didn't. Well, basically that completed a big breakdown that I sort of took as a big sort of bearish outlook. You sort of just on a longer term basis, you're still in this sequence of lower highs and the downtrend, I suppose, or it's quite a shallow downtrend, but you can still sort of measure that back to sort of 1300 area really at the moment. So this sort of corrective move is still arguably playing out within this longer term bear phase. I mean, it is really still playing out within this longer term bear phase, but obviously the momentum is continuing to improve to the upside, and you're back above that 63 level that we hit in November and August, which suggests the market is increasingly positive near term, near to medium term positive. However, I'm still not ruling out the fact that I think the overhead supply will kick in at some stage, and you've got a fair amount of overhead supply between sort of 1200 and 1250. There's quite a big band of it. Certainly around 1250 again is where it kicks in, this overhead supply. So you could see the continuation of this move higher into that resistance band, but still ultimately I think it will be a rally that fails at some stage. But obviously the near-term outlook is increasingly positive. Now, just sort of zooming in here, you've got these Fibonacci levels. 1221 was 50% of the big bull run from 1047 up towards 1375. So 1211 is your next level. Now we're clear of 61.8. And look at that, 38.2% at 1250. Again, interesting that 1250 level is coming up as a sort of a confluence of resistance levels. So we've got the improving outlook on the momentum, and you're back above 1200. So 1211 is your next target. Beyond that, you're sort of looking at this, arguably this little reaction high at 1221, and then you're looking at 1230 area again. So there is areas of overhead supply still in place, but between 1200 and 1250, I think there's a fair amount of sort of resistance. But to be honest, you've got to be sort of pulling near high and near term, because the outlook is increasingly positive. This is the hourly chart where you can see sort of the market moving above 1200 and continuing to sort of hit and leave higher lows. 1177 was that reaction low yesterday before the bulls really took control again. You sort of, wow, sort of $25 back above that level already. So near term maybe a little bit stretched. Maybe sort of look for a little bit of a dip as a buying opportunity near term. 1190. Look at that, 1190 old highs, reaction low. 1190, sort of 1189 if you go by the tick, but it's still sort of around 1190 is your nice band of support, and that would sort of bring you back into these momentum sort of moving averages. So again, that would be a decent area to start looking at a buying opportunity again. But closing above 1200 big figure today, I think would be very bullish near term anyway. So I wish you good luck in your trading today, and I'll speak to you again tomorrow. Thank you.